Are we recording? Oh.
Hello, welcome to a virtual Real Law State with Patti and Kate. Woo, woo. I am Kate Flanagan-McGregor, and I am here with
Patti McCardle, your real estate attorney.
Yes, and at ReaLAWstate with Patti and Kate, we have been doing an ARC, and that ARC, if you remember, is based on this investment group that Patti, investment strategies group that Patti has on her Instagram called Dirty Dozen. Well, the
handle, I keep calling it
the handle coming in.
So Dirty Dozen RE for women. So it's all about investment strategies, trying to, investments are risky. So there's some risk in there. So it's just talking about who's your dirty dozen, who are your strategic advisors that you should surround yourself with so you can avoid some of the pitfalls, so you can avoid losing money. So that's what it's all about.
That is what our ARC has been. And today we are talking with our number 3 on the list of that dozen, which is your insurance agent. And we have David Dunn here on our Zoom call. And he's from RogersGray in Mattapoisett. And he is going to be talking with you about some insurance tidbits that will help you in that real estate investment angle. So anyway, David, thank you so much for joining us.
Thank you. It's a pleasure to be here. It's always good to see you lovely ladies.
Thank you.
He's a sweet talker, too.
He sure is. Hey, David, before we get started, can you just let people know how they can find you? Because a lot of times when they're listening at the beginning, I want you to tell them at the beginning and I want you to tell them at the end.
But also tell them about how long you've been in insurance, so a little bit of background and your contact. That'd be awesome.
Sure. So I've been in the insurance business for 25 years. I actually just merged my agency with RogersGray, so I am now the partner executive vice president of RogersGray. We have 12 locations.
We got a bell. Get that bell. That is awesome. Congratulations.
It's pretty exciting. So we've got 12 locations. Mattapoisett is where I tend to work the most. I like the commute to my house. But yeah, 25 years in the business, and I've, from the investment side, own commercial real estate, own investment properties, have sold and bought many properties. So I not only insure it, but I live and breathe it every day.
That is awesome.
That is awesome.
Okay, so Patti, why don't you start them off?
David happens to be my insurance agent, so he was definitely my go-to. So he was my go-to guy to see if he would guest star on this episode today.
Yes.
And one of the things that I love about David, and why I think he is an important example of who you need in your life, is so I just started to get into real estate investing and kind of dabbling here, dabbling there, and getting into some condo conversions, things that were getting a little trickier. I had no idea how to insure it, so I needed my friend David. But the good thing was he could give me all the tidbits on the ins and outs of each different type of transaction. But more importantly to me, and why I think he's such an asset, is because he knows and understands kind of the whole portfolio and kind of where I'm going. So he can guide me of, well, if you do this, or maybe you need to think about this, or really maybe get an umbrella on that, and kind of looking out for my best interests, overall. And I think that is such an asset. So I thank you for that, David, for being a top guy.
Yeah.
Thank you.
So part of today, I think, was we wanted to hear some of those tidbits, maybe some of those pitfalls or some of the things, that investors should think about. And one of the topics that you had brought up that is kind of a recent issue in the insurance world are people who are investing in trying to rent out their properties for Airbnb purposes or VRBO or any kind of temporary short-term rentals. And there's some repercussions there, not just for taxes, but also there are insurance repercussions. So let us know what your thoughts are on that.
Yeah, exactly. This is a recent thing that's really come up. Last summer, it was July 1st, 2019. The state actually passed a law that if you have an Airbnb exposure or you rent your home, condo, cottage, whatever it might be for Airbnb, there's a requirement that you have $1 million worth of liability on that property right now. So that's really important for people to know and to understand that there's that requirement that wasn't there before.
So
one of the things that, go ahead.
So what does that look like as far as dollars go? for that $1 million?
Well, it depends
So
what
the
they
$1 million really isn't horrible. Some carriers will write it right on the policy itself, and it literally can be $50. I mean, not a big deal.
Yeah.
A lot of people will get a personal umbrella policy depending on how the property is owned. That'll get you there. Umbrella policies start at $200. The $1 million also sits on top of your cars. So that's why they say it's an umbrella.
It's not that scary.
Notice the hands, umbrella.
Umbrella. So it's not that
But,
scary. People should definitely follow this law.
yeah, without a doubt. So here's the really important thing, though. A lot of the carriers that we represent don't want Airbnb exposures at all. So they specifically exclude it and don't want to have it. So that again is why you want to talk to us and say, hey, I've got your house. It's insured with this company. Do they allow an Airbnb exposure? How many days do they allow it? Is it weekly? Will they let you do nightly? There's a lot of parameters right now that are important for people to know about. So that's definitely why we suggest call your agent, talk to your agent if you're thinking about doing the Airbnb thing.
So did that happen before all the challenges that we saw with the Airbnb? Like, was that right away that they didn't want the Airbnb, or is that something relatively new?
Well, the new requirement for the $1 million is new, but the carriers have always, a lot of them have not liked Airbnb exposure at all. They just don't want that kind of nightly rental of properties. Most of them have been fine with weekly rentals. A lot of them will allow you to rent 4 weeks out of the year, which is great, but it's got to be on a weekly basis. Some of them will only allow you to do a couple of weeks. Really depends on the carrier, but we've got to know what are you doing, because why do you buy insurance? So a claim is covered, right?
Yeah,
So you don't want to have an Airbnb exposure and all of a sudden you have a claim, they burn the house down and then you find out, oops, it's not covered. That's no bueno, as they say.
Yeah, no,
that's an unintended consequence right there. And I think, don't think you're going to outsmart your insurance company and be like, I'll just tell them it was a guest or something, because the claim is going to come through somebody saying, yes, I was renting there and I rented it through Airbnb.
Well, and that was part of the reason why I was saying if it's $1 million policy, but it's only $50 or somewhere around there, then it's totally worth your while to go see David and say, David, what do you got for us? Yeah. Yeah. Good.
Right. Yeah. Let's talk about it. Talk about it before we do it.
Right. Now, is there a difference if, because most people, when they're doing an Airbnb, it's out of their own personal home. So is there a difference if you have, say, a commercial property that the insurance company knows you're renting it out, if tenants are going to be in there, but instead of doing a yearly rental, now I'm going to do a weekly Airbnb. Is that like a commercial policy? Is that going to cover different, or they don't like it either?
Right. Great question. So it depends on the carrier and it depends on the exposure. So, is it a 4-family? Is it a 1-family but it's owned commercially? Is it a commercial building that you've got, condos in? I mean, it all depends, and it all depends on the carrier. So again, it's like we need to know. You tell me what is it that your dream is to use the property for, and let us figure out the right coverage for it, because that's again, talk to us first. Let's get it taken care of correctly.
That's awesome.
Question for you.
Yes.
So I am a real estate agent, and I have a client that's interested in investment property and whatever kind. When should I loop you in with them?
I would say get me in right before they seriously think they want to put an offer in. You've got the cost of the taxes, obviously the cost to buy the investment property, but that insurance piece can be a huge monthly nut too. So especially here when we're dealing with coastal properties, you could have a flood insurance exposure that you've got to take care of, and that can cost big bucks. So how much is that insurance going to cost you? What is that monthly nut going to be, along with your taxes and along with obviously with the cost of the mortgage? So I would say always roll us in before, so you know what that number is going to be before you put the offer in, so you've really got all your numbers in front of you.
Yeah, I was just reading somewhere where it said if you can't afford the investment, if you can't afford the insurance, then you cannot afford the investment.
Yeah.
Well, exactly. Go ahead.
I was just going to say, I know I've had some come through my office and the premiums can vary. So, you hear, I think on the average on a certain size, single family home, you're talking anywhere, at least this is what I see. I'm sure you've seen all kinds of varies, $3,000 to $10,000. But then all of a sudden I'll get one come through my office and the premium is something like 25 grand. And you're like, whoa,
Right.
where did that come from? And so definitely investigating it beforehand, because by the time they hit my office, they're already under agreement. So that would be a problem.
Right, exactly. And I mean, we've had, with the new RogersGray company that I'm involved with, we've got some exclusive markets that other people don't have. I just had one in Mattapoisett. The flood insurance was $11,000. That was the best quote out there. With our exclusive market, we were around $6,000.
Oh,
And
wow.
that's a huge difference. Now, this was a big, huge, beautiful house on the water, but I mean that kind of price difference can be huge. So
Yeah,
that's my plug for Rogers and Gray.
Yeah. Okay, well, you know what? I mean, that's why I wanted you to tell us at the beginning, tell us at the end how they can find you, because you've always been so helpful. Our
Thank
jobs
you.
changed so dramatically with the flood and whatnot. And you and your company have always been so gracious and taking our calls and helping us navigate through. So I appreciate that. So I'm really glad to be able to give you that plug, because we love you.
Yeah.
Here at Bold, we love you.
That love comes right back at you because you guys are just fabulous.
It's like Valentine's Day soon, so
I know. Yeah, really. It's a part. Like we got notes.
So let's talk about, just to go back a little bit, we were talking a little bit about umbrella policy. So give everybody a little tidbit on how that works, because I know, or I think I know, that you can have an umbrella maybe over all your personal, but you need a separate policy for all your commercial. You can't umbrella both, right? So give us a little bit of that.
Right. So, I mean, I'll just use myself as an example. I have property that I own personally, and then I have commercial property. So the commercial property is owned by its own entity. It happens to be an LLC. But I have an umbrella policy, a commercial umbrella that sits on top of those properties. I have a personal umbrella that sits on top of my personal properties. The two umbrellas don't, one only does commercial, one only does personal. So you really got to cover yourself that way. It's so inexpensive to put another million to, I mean, we sell a lot of $5 million umbrellas these days. The whole idea is you got to think about what's your net worth, what's out there that could potentially be at stake as far as the lawsuit goes, and what's your future earnings. So it's not just what you have right now, it's also, what am I going to make in the next 20 years that could be attached in a bad lawsuit. So do you guys have a good feel for what an umbrella actually does? I could give you a quick one.
Why don't you do that, just in case somebody's watching that is not familiar with an umbrella, because I know what it does, but I'd like you to explain that.
Just really quickly, let's use the auto as an example. Auto policy is there and it has an amount of liability on it. You get into a bad accident, it's your fault. God forbid you really hurt somebody or worse. The auto policy pays out first, usually $250,000. Once they've paid that out, they're done. Their contract is finished. The umbrella policy then kicks in for another $1 million, $2 million, $3 million. You hope that money in front of the attorney will keep them away from your personal assets and have them just take the money to hopefully the person that was injured make them whole again. And again, starting at like $200 or less, it's certainly worth it.
And in today's litigious world,
Yes.
These verdicts that are coming in get higher and higher every year.
Yeah.
So having that extra amount, you work so hard to create this portfolio, to have these investment properties, and so to give those extra couple $100 for that extra layer and comfort to know that nobody's going to take that from you is just a no-brainer, I think.
Yeah, definitely. And that they always say, like, everything was fine until it wasn't. And this is just
Right.
not. This is not something to mess with. And that is again a big decision when you're investing. It's the whole entire package of responsibilities that come with that. And I think that this is just such great knowledge for our budding investors out there.
Well, one more thing I do want to talk about is usually when people start investing, they start in a multifamily. So I think that's a good place to start.
Yes,
I think
definitely.
that's where people are looking for some residential multifamilies. So what's some of your advice there, or some insights, tidbits, what you got for us?
Pretty straightforward. I know that, from an insurance standpoint, it's pretty straightforward. If you're going to have a non-owner occupied, say 2-family, easy to insure, inexpensive to insure. My tip, because I work with lots and lots of investors, is they always say, when you're getting in, your tenants, that's what really matters, right? That makes or breaks you, is having those tenants.
Yeah.
And they always say, don't ask your tenants' last landlord how they were. Ask 2 landlords ago, because the last landlord will say, oh yeah, they were great. Yeah, take them on. So I always think that's good advice.
That's awesome advice.
Oh my gosh.
Not insurance advice, but advice.
Yeah. And then I think, we were talking a little bit before we started recording that when you're going to buy, say, your multifamily property, you want to, we just talked a little bit about protecting your personal assets. So you want to, think about how you're titling that property. So, are you putting it into some kind of an LLC or, an S corporation or a trust or whatever it is that you come up with between you and your attorney, yes. But that, goes hand in hand, because then you got to let your insurance agent know that you're putting it into this entity, because when you first sign that purchase and sale agreement, it's probably just in your personal name.
Right.
And then at the end, when you take title, you've decided to put it into this other entity. And meanwhile, before we get to that closing point, you've talked to your insurance agent and you're saying, oh yeah, I'm buying this property. Here's my purchase and sale agreement in my personal name.
Yes.
Right.
So I would assume there's conversations have got to be had when they start talking about what kind of entity.
Well, yeah, and to speak to that point too, it's an excellent point. A lot of times we'll get thrown that, oh, we're going to put it in an LLC, which is fine. That's great. I highly recommend it. But some of the carriers that we have will do a 2-family and say a real estate trust or, husband-wife name, single name, whatever it might be, but they won't do an LLC. So if you're getting close to the closing and I don't know about the LLC, it can throw us a curve at the last second where we have to kind of shift and go to somebody else. So again, talk to us. We need to know what you're doing, beforehand to get it done correctly.
Yeah, and I think, I'm not sure how to ask this or, well, I'm just going to throw it out there. So there's a lot of insurance agents out there, and they all say yeah, no problem. And I've had some horror stories come through my office where people thought they were insured for things and they weren't. So
right.
Do you have any advice on how somebody can vet somebody out? Clearly they need to go see you, David, but what are maybe some of the questions that they should ask, to make sure that they're not just being sold a bill of goods that really aren't good.
Right. So one of the things that we pride ourselves on is we want to go through specifically kind of those gotchas, and we've worked on forms over the year. I actually have a couple right in front of me. I don't know if you can see this, but this is one for a rental property. Can you see that? But anyways, what we have is some forms that we go through with the customers, and we say, okay, what about fair rental value? What about earthquake? What about flood? What about umbrellas? And we have a checklist where we go through all those things and make sure that we talked about them. We can prove that we've had a discussion about all those little things. Because when it comes down to it, in insurance, it's not what's covered, right? It's what's not covered. That's the important thing. So we like to pride ourselves with checklists that we go through with people to make sure that we've had those conversations every time consistently, one customer to the next, to the next, to the next. If your agent just says, oh, tell me the address, and doesn't ask you, a whole bunch of questions about it and what you're doing with it, to me, that's a red flag. You've got to know about the property, you've got to know about the customer, you've got to, have all that information in front of you so you can insure it correctly.
And it's funny because I've been through this process with him many times, and I sit there and I'm always like, more questions?
There's a fine balance between making sure you're insured correctly and torturing you. So we try and
But secretly, I'm loving it because I know I'm in good hands. So don't get me wrong, but when you're in that mode, you're excited about buying this next property. You're like, David, just insure it. And he's asking these questions, but secretly I'm going, oh crap, I hadn't thought that, and I should have thought about, because we're in this area of high wind or whatever it is, so. It's awesome, but I think that's a perfect example of a red flag when people aren't asking you the questions. So,
and I think that especially for new investors, and would you agree and will you confirm for those listening, is you know, get you involved early and give as much information as possible from the beginning, and stay in touch as every step of the way goes. So don't just like say, okay, the binder, okay, I've got that checked off my list. You know, because I think sometimes what people think is that they're bugging us. And they're like, oh no, I've already talked to him, I can't call him again. You know, and I know they do that with me and they do it with you.
Yeah.
And so it's like, this is really important. You know, it's an investment. It's something that you are professionally doing. It's something that takes a higher level of, you know, fiduciary in a lot of ways. And I guess I want to confirm that, you know, more communication with you is better.
Absolutely, absolutely. And a lot of times these investment properties too, you know, they may be under rehab for a few months. So you're working on that property, so it's actually vacant, under construction. So I've got to insure it that way. And then when you're done, you think, well, I'm gonna use it this way, but then maybe it changes. So it's a process. You know, we want to work through with those, and things change, and that's fine.
Yeah. Yeah, but just let you know, because like you said, when you're not insured for something,
that's when it's a problem.
Right.
And it's funny because I hear people saying like, how can I get out of this? I'm like, you can't. Like, do not get out of this. You know, make sure you are being comprehensive in this, because this is not play. This is real.
Yeah.
You know, and there's a lot of loss that can happen. And not just loss of the investment money, as you said before, loss of your personal assets and loss of a whole bunch of other things.
Yeah.
So it's playing for real.
All right, David, we gave us so many tidbits. Is there anything we didn't cover that you think is important for us to cover?
Or do you have any questions for us?
Questions for you guys? No, I know exactly what you guys do, and I would just like to comment that you're the best around. So.
Thank you.
He's such
It's always a pleasure working with you guys, because I know, you know, if somebody calls and they say, oh, this is the team I'm working with, I'm like, all right, you got a great team there. You're in great hands. So that's the important thing.
Awesome. Well,
That's awesome.
I think what her Dirty Dozen is showing us all is that this team idea has to let go against all those folks of that dozen. And I think that this has just been so exciting. And you did such a phenomenal job filling us in on this. And also, I think, allaying people's fears.
Yeah.
You know, I think that when people are afraid of this, you know, now they know that they don't have to, and that they can call you, and that, you know, you can help guide them through it.
And just on that note, David, why don't you give us like your office telephone number? What's a good number for people to call you?
And we'll also put it in the notes so that people will see it. But just, you know, for those who have who've been taking notes, that you can let them know.
Great. So my direct phone, and it follows me everywhere, is 508-322-3200. That goes everywhere. And a good email for me is ddunn@rogersgray.com.
Beautiful.
Awesome.
Thank you so much. And thank you for phoning in with us. I know that this has been fun, we were a little nervous, but you know, it was phenomenal, and you were phenomenal.
Oh, why, thank you. No, it was really fun. Thanks for having me as a guest, and have a great night.
Let's do deals, man. All right. We'll see you
Hi,
later.
David.
Bye-bye. Thanks.